If you are a board member, an executive director, or a leader in a nonprofit, are you aware that there is a provision that allows for the automatic revocation of 501c3 status? Let's look at how that comes about. It happens by operation of law. The IRS does not need to do an audit or send a warning letter, etc. It's a default action that happens by law. The mandate from the IRS is that if a nonprofit organization fails to file its returns for 3 years, on the due date of the third return, this action becomes automatic. When that happens, the nonprofit immediately defaults to a taxable corporate entity, triggering the need to file a Form 1120 for all the missed periods. So you miss year one, then you miss year two's filing. On the date the third filing is due, that's the effective revocation date. Now, if this happens to you and you're surprised by it, the oversight and governance is not where it needs to be. Now let's look at the donor and safe harbor provisions. From a charity perspective, it becomes a for-profit and it requires a filing of Form 1120 for all missing periods. From the donor side, IRC 170 disallows donations. So for grants and major donors who have multi-year donations, they should be looking at some report to try and figure out whether or not the charity has its 501c3 status active, because without that, they could face penalties, etc. Now, what about reinstatement? This is not a simple call and get it reinstated, and you can't even file an administrative protest under Section 7428. The remedy is that you must file a brand new application for recognition of exemption. That can be retroactive in certain cases if you can show reasonable cause. This is where you need to consult your tax professional or your accountant to make sure that the process is followed to the letter. Now, these are the rules that's going to drive everything. You might want to stop and take a screenshot of this page and use it to have a discussion with your CPA or tax professional so you have a better understanding of how these things work. The best practices then are that you have a good governance framework and oversight framework that tracks filed returns. For example, annually the board inquires whether tax returns have been filed, and if not, how late they are and when they are going to be filed. Now for donors, they should be checking the IRS TEOS pre-donation site to see whether the donations that they're making are to a 501c3. It's possible that when you began the journey they were, but that at some point when they lose it, you want to be sure you understand what that exposure is. So in summary, consult your tax professional or your accounting professional, confirm that returns are filed timely, and be familiar with the applicable regulations. I hope that's helpful. Thank you so much for watching.